Chipotle shares moving to the upside here after hours. You can see the stock up just over 8%. A bit of a mixed bag here from Chipotle. Revenue coming in lighter than what the street was expecting. Adjusted EPS, though, beating expectations, $9.30. The estimate was for $9.09. Same-store sales, very important number here to look for in this results, came in at 10.1% jump. The estimate was for 11%. So let's talk all about this with Nick Setyan. He's at Wedbush Securities and Managing Director. Nick, it's good to see you. Ali Canal, who broke the earnings for us, is still on set here to discuss a little bit more. But Nick, why are we seeing so much excitement in after-hours action here? Stock up just about 8%, yet they missed on same-store sales and revenue a bit light than what the street was expecting.
Well, so there were two big fears in terms of what the bears were looking for. Number one is, comp miss that was going to translate into quarter-to-date guidance or Q3 guidance that was below expectations. Number two was a big miss on yield level margins and an EPS miss. Now, even though we got the miss on the quarter in terms of the comp, the Q3 guidance is pretty much in line, mid to high single digits. The consensus is in that 7.5% range. And even more importantly, they beat on unit level margins and they beat on COGS. Now, what that means is that we've pretty much seen peak inflation in Q2. And with the incremental price increase they're going to take in August, we've seen trough margins in Q2. And so margins are going to start to increase going forward. And if you're actually comping a mid to high single digit type of comp in Q3 and whatever that implies in terms of Q4 and the 23 numbers and modeling, the numbers aren't going down. 2023 numbers aren't going down. In fact, it's more likely that the EPS numbers are going to go up. And so that's why you're seeing, the stock move up the way it's moving up.
And I want to hit on those planned price increases in August. Chipotle says that they expect those price increases to be in the mid to high single digits. They raised prices by 4% in the first quarter, and that followed two previous price hikes. I know historically consumers are willing to spend a little more at Chipotle, but is there a point where consumers won't pay anymore? And as a business, how do you balance not hitting that point too quickly while also maintaining your margins?
Well, I think, consumers wouldn't spend if, the competition was keeping prices the same or there was some kind of relative value somewhere else. But in a world where McDonald's is taking 8 to 9% price increases, in a world where the grocery price increases are up in the, low double digit range, a high single digit price increase is actually not putting yourself in a disadvantageous position. And so relatively speaking, Chipotle is still pretty much the same relative value to other restaurants and to grocery as it was in 2019. And so, we continue to see even in Q2, I think the mix was heavily negative, but transactions were likely positive, with 12.5% menu price increases being passed through in Q2. So, we just haven't seen that impact.
And Nick, when people were keeping an eye on what was happening with McDonald's earnings, wondering, would that be the same for, say, your Chipotles? What is your take on that in terms of how this market is doing, as well as how Chipotle is trying to continue to expand, even though it does still have high input costs, and we do see food inflation still at a high?
Well, Chipotle has one of the highest returns on new builds. And so they're going to continue to build, to the extent that they can find sites, and to the extent that they can find, the supplies and the material and the labor, et cetera. Their desire to build and the returns aren't the gating factor. It's just availability of construction labor and availability of supplies like air conditioning and kitchen equipment. And so, the unit growth rate's only going to accelerate from here, not decline. And I think a lot of restaurants are actually in the same position. I just think across the board, there's a lot of negatives being priced in, but there's a lot of positives that are happening that are just completely being ignored right now. So I just think a lot of restaurants are going to see a lot more growth than people are giving them credit for right now.
Nick, what's getting ignored?
Well, the fact that, we just beat on margins when no one was expecting a margin beat, right? You're facing one of the highest avocado, prices that went up in a matter of a month and a half. you're seeing record dairy costs that, again, jumped in a month and a half, unprecedented types of inflation. And Chipotle was able to beat on margins. And this morning, McDonald's was able to do the same. And we haven't really seen, transactions or comparable sales fall off a cliff in either of those scenarios. And so, last week we saw Domino's, the stock acted extremely well after their numbers. Again, another indication that, the worst is behind us. So, going forward, I think we're going to see much more of the same with a lot of the other restaurants' earnings reports.
Also want to mention 39% of transactions during the quarter came from digital orders. They have evolved in that capacity. $300 million to repurchase shares of the company in the quarter as well. Nick Setyan from Wedbush, appreciate it. Thank you, sir.